Welcome to the Aeromir Trading Group 1. Today is the 11th of January, 2021. So welcome everyone, second Trading Group 1 meeting of the year. And if you're new, Trading Group 1 is just a bunch of experienced traders getting together once a week on Monday morning at, I guess it's 11 a.m. Eastern. So everyone's welcome. It's, yeah, if you have any questions, feel free to join in and yeah, we'll talk about trading. So, Mark, welcome. It was nice talking to you yesterday. Hopefully your cough's doing okay today. Mark and I were talking about Night Owl yesterday, and the auto trading, I guess, is oh, fever's higher. Oh, bummer.
Hi, Tom.
Hey, Mark.
Yeah, it's, I guess I spoke a day too soon with you yesterday when I was telling you that I was hovering in the upper 100s and low 101s. Today I'm at 101.9 and feel like crap. So
I bet you do, yeah.
bear with me. I have very little strength in my voice.
So, yeah, can you give us an update on the auto trading?
Yes, I can. We took a trade again last night. We shorted crude oil. Entered it on a stop, took a second entry on a second stop. Excuse me for a sec. And took the profit this morning. Well, there's still a trailing stop open at 52.20, but even if that stops out, everyone will end up with a profit who took the, well, Striker took the two entries. So that's our fifth consecutive win of the new year, and very pleased with the 24-hour coverage that we have now, because that's what was lacking in most of 2020 regarding the auto trading at Striker. And as you and I talked about yesterday, they've solved that problem by bringing in an affiliate broker. You said he was in Czech Republic. For some reason, I was thinking he was in France, but you've talked more recently with them than me, so I'll.
Well, I'd have to go back and check my emails, but I'm pretty sure he said Czech, but it could be wrong.
Well, in any case, if he's in Europe, that solves the problem for Night Owl, because markets that we trade, crude oil and euro currency, tend to become active when London opens, and that's at 9 o'clock Eastern time, which, if I'm not mistaken, is 4 o'clock. I said it backwards. 4 o'clock Eastern time, which is 9 o'clock Greenwich Mean Time. So just having an affiliate broker in Europe covering the bulk of the overnight period, that was the gap that we had to deal with last year regarding the auto trading, and now they've solved that. So I'm quite pleased, and we've seen instant improvement in the auto trading results, because most of the adjustments to Night Owl trades would come during that European period.
Right.
In any case,
I've got a crude 10-minute chart up, by the way.
Oh, I see. Sure enough. Well, that red candle there is us. It went as high as 52.70 last night. We were seeking an MIT very close to our stop. We were playing a very low risk entry, which did not elect. And ultimately, we went with the two stop entries, one at, as I recall, 52.47. The other, I think, was at 52.30. And it's currently trading. Is that March you have up, or February?
It's a continuous futures contract, so
Well, that should be February, because we don't roll into March until the end of this week. In any case,
yeah, I'm not sure which one it is.
Well, we took off part of our position in the $52 area last night, and still have the trailing contracts open with the stop at 52.20. So regardless of what happens, we've locked in our profit.
You're trading the February contract?
Through Thursday, yes.
Okay, I'll pull up the right chart then.
And for any Night Owl members here in the trading group today, just take note that we will roll into the March contract on the Friday session.
Okay, so this should be February. Yep.
Yep. And that's where we are now. We're in the upper 90s.
All right, well, good. And I guess because that was also a problem with ExperSignal for auto trading, because the British pound and euro obviously get active during the European session. So since that's solved, I've been talking to William over at Striker about setting up the same for ExperSignal. So that should be coming pretty soon. I'm waiting for Daniel. He's got a signal generator working pretty well. He was just adding another filter to eliminate price spikes, and then he's going to test it for a day or two. So I imagine I should have it probably later this week. So it's getting pretty close.
Price spikes are a fact of life in crude oil almost every Sunday at the open. And that's the reason I put the MIT entry so far away, because you can always count on a price spike Sunday night at 6 o'clock Eastern time in crude oil. It happens so frequently, you can just practically bank on it.
How big of a spike is it?
Well, it'll typically be 40 to 50 cents plus. Let's see, I've got my chart open from last night, and it was, in last night's case, 29 cents, which is relatively benign. We've seen them as much as $1 in the first candle. And oftentimes, because of the low volume in the QM contract, you can even get a farther away price. Because after all, if the market is thin, they got to fill those orders, and you'll get a spike that's even longer frequently in the QM at the Sunday open. But be that as it may, at Striker in the auto trading, we trade the big contract, the CL.
Right.
In any case, it's underway.
I think you said December was a pretty good month too.
December was, and January so far we've not incurred any losses in the auto trading service. We've had 5 trades and 5 wins. As I recall, 3 crudes and 2 euros, I believe, was the breakdown. We've to attract new members, especially to the auto trading service, because it's not new. We started it in 2019, but I'll call it revamped now that we have the 24-hour coverage.
And now it's where it should have started.
Yeah. Exactly. And like I was saying a moment ago, the change in performance has been quite impressive to my mind, because again, that's when the night owl trades typically adjust either targets or stops or take additional entries. And it was during that European period where those kinds of things were happening and no one was covering that period. And so consequently, night owl would recognize a win. And again, this is 2019 and early 2020. Night owl would recognize a win. The auto trading subscribers would take a loss because targets were never adjusted, stops were never adjusted, and so on. And that's the essence of night owl. Night owl has its dynamic targeting, but those dynamic targets were not recognized by Striker in 2019 and early 2020, which is why I suspended the auto trading until late last autumn, when they finally could provide coverage for the 24-hour period. And now, again, things are in sync and rolling along quite nicely, as night owl historically has done. It's a great benefit for those traders who either have limited experience with futures trading, because futures markets move very fast, and it's also great for those who work day jobs or simply don't want to stay up all night in the North American nighttime monitoring their trades. I think I mentioned in an earlier trading group meeting that the most requested item that I received from Night Owl traders last year was, or maybe I should say complaint. The most frequent complaint was that Night Owl subscribers did not like staying up during the night or having to get up sometimes multiple times a night to change targets or adjust stops or deal with new entries. And the auto trading completely eliminates that. You know, you can subscribe to auto trading and basically Striker takes over and they manage the trade from beginning to end, and you as the auto trader don't have to do anything, nothing at all.
Just fund the account. That's it, right?
Exactly. Yeah, that's literally the only thing you do is you open an account and sign the letter of direction with Striker to take Night Owl trades, and they do the rest.
Well, that's good news about Striker.
It is, and we, you know, to attract new subscribers into the service, or you know, to bring back those who had tried it before and left feeling discouraged because of the gap in the previous gap. I mean, in the overnight coverage, we've lowered the pricing and simplified it as well. It's simply a monthly charge now, just like I think all the Aeromir services are monthly charges.
Yeah, some of them have some longer term ones, but for the most part, they're monthly.
Well, as it happens, most of my Night Owl subscribers were choosing quarterly. So what I did was I just took the old rates, the quarterly rate and the annual rates that they used to charge, and just amortized them by the month. And we came up with the $195 a month, which was the most favorable rate in the old pricing system. You know, basically taking the annual rate and dividing it by 12. So now effectively everyone has what used to be the annual rate, except they pay by the month. So it's greatly simplified that as well. So it's a smoother, more streamlined Night Owl service, whether you take the advisory service and do the trading yourself or go with the auto trading. Both are available. I should emphasize for those who want to trade Night Owl by themselves with the revised format for the setups. Very simply, you know, it says enter at this price, exit at that price, and put the stop loss price wherever. It's that simple, really that simple.
And I guess we got to do another roundtable to kind of go over the new and improved or updated, revised Night Owl.
Yeah, that probably would help, because I still prepare the arrays like I've done for many years. I use them internally, and I have a couple of subscribers who preferred getting the arrays, you know, even after we made the change. So, you know, I provide it to them as a courtesy because I have it anyway. It's really not any additional work for me. But otherwise, the feedback that I've gotten from everybody else has been they like the new format a whole lot better because it's so much simpler.
Right. Okay, well, let's we can talk offline and get on the calendar to do a presentation, but I think that would be a good idea.
I do too.
All right, Mark. Well, go ahead.
You also said something yesterday about, and I wasn't clear as to what you meant exactly, but something about rewriting or redoing the sales page, and whether that would be the same effort or a second effort. You know, we should get that on the calendar too.
Oh yeah, definitely. So let's talk offline and coordinate that stuff.
Okay.
And hope you feel better. That COVID sounds like it's a rough ride.
Yeah, it is. I'm kind of self-conscious about it, I guess, you know, because as I was telling you yesterday, Pfizer manufactures the vaccine literally down the street from me. The Pfizer plant is 3 miles south of my apartment here in Kalamazoo. And it's kind of ironic that I'm sitting here, I never go out, and yet I somehow got this. But
yeah, it only takes one little virus to get in your system.
It does. And I made a trip down to Tucson back at Thanksgiving, and I think that's where I was exposed to it. You know, maybe in the Uber, maybe even on the plane. I don't know. But in any case, when I returned from Tucson at the end of November, well, right at the very beginning of December, I first exhibited the symptoms, and then they confirmed it. And at the time, it was kind of a scary thing. Now it's more of an annoyance.
Right. Well, like I said, hope you feel better.
Thanks.
Yeah. And thanks for the update. And like I said, we'll talk offline and get everything set up.
Okay.
All right. And I see Wayne's here. Good morning, Wayne.
Oh, good morning, Tom.
How are you guys doing with everything? I know kind of traumatic events happening there.
Oh, yeah. I mean, it's my wife is back in town now, so it's just small transitions and kind of getting back into somewhat of a fold of things. So yeah, it's just life transitions.
Yep. Um, so I was looking at the sleep portfolio earlier today. I think it was up over 2% for the week still. So it was another good week.
Yeah. We've had a great week. I mean, I'll definitely say more to the subscribers in our weekly article. There's we were starting to shift into a pretty highly inflationary setup, and on our monthly meeting, we were definitely talking about how here very soon after this first quarter, we'll probably see a lot more of the dollar starting to gain strength again. But looks like that's going to happen a little bit earlier than we thought.
Oh, I think it's starting to pick up a little steam. I see the currencies priced in dollars are starting to sell off, which means the dollar is getting stronger.
Yeah, exactly. I mean, according to the forecasts and everything that, I kind of started talking about on our monthly meeting, I wasn't thinking that we were going to see that until later this quarter. But it looks like, yet again, you kind of said this, I think, last week, right? Stocks are always 6 months ahead or something.
Yeah, well, here's a daily chart of the dollar, so you can see over the last, I don't know, 5 or 6 trading days, it's gotten weaker, which again means the dollar is getting stronger.
Right. Which, yeah, I mean, everyone else is destroying their currencies, trying to keep up with the amount of pressure that we put on our own dollar. I mean, it's been amazing over the last, 8 months how much pressure we put on the dollar after the COVID crisis.
Yeah, I mean, here's a daily chart of the euro. You can see how it's just been rising over the last several months as the dollar weakened. Kind of a similar picture to the pound, really.
Yeah, and as the dollar strengthens like this, I mean, it all depends on how things continue, but fundamentally, it can create a little bit of havoc for equities. So it'll be interesting if that play ends up coming out. How it ends up turning out. If the dollar strengthens and then we get some bond strengthening at the same time, that'll be a interesting setup for something that would be like really sensitive or really similar to like 2011. I'd actually been writing articles for the last few weeks. I just kind of write weekly commentaries of just kind of things that show up and just kind of my perspective. It doesn't mean that it's like the end all be all because it's just my perspective. There's tons of perspectives out there that are even more advanced than mine. But anyways, it's kind of showing off that it's got a strong similarity to 2011 and right before the debt crisis. It took a few months for that to kind of build up and then finally kind of push out. So I wouldn't be surprised to see something like that within the next few months.
I think you said some of the allocations, like on gold or TLT or the dollar, were getting super close to being triggered.
Yeah, we did get triggered. We ended up getting triggered last week into two of the assets that went the complete opposite direction. And so I mean that just goes back to proper position sizing for risk on a total allocation, right? It's kind of interesting, there's I occasionally scan through like other services out there, or I've been in the whole kind of DIY investor block for quite a while. And it's always something that I've noticed is that like, um, I won't name any names, but hey, look at this trade that did 1,000%, or look at this pick that did X% or something like that. And it's kind of like, well, how much money should I put, or how much size should I put in each one of these to actually grow the account? Because it's amazing, if we switch up the position size just a little bit in some of these, so-called amazing calls, right? We'd be flat on our face broke, after some time. So it's kind of like those are the most important things is the account actually growing, right? Is it a portfolio or is it just a trade alert service and then it just leaves it up to someone else to position size it and blow up their account? So um like that's one thing that the sleep well that I designed the sleep well around is I wanted to make sure that position sizing was done in a way that it it adds to account growth over time in the highest probabilities. And so, sometimes we're wrong, but that's okay. It's all part of trading, right?
Yeah, and position sizing is pretty important. We talked about the parking trade a couple of weeks ago, and it's a great trade, but there are times when you lose quite a bit. So, there's a lot of tail risk on a trade like that. So you get a market move like earlier last year where the market's down 30 some percent, and you're in, your whole account's in parking trades. You're in a world of hurt. But
Right,
if
right.
you position size it and it's just a small sliver of your account, you can absorb the loss and still have nice returns on that sliver of your account.
Yeah, you're exactly right. I had a I had a person reach out to me and ask about leveraging, and they were really scared of leveraging. And which I mean is completely natural, right? Like I mean, we get told, people blow up with leverage and all this kinds of stuff and everything. So it's really easy to kind of see how leverage is an issue. And then what's kind of interesting though is that there's different ways to leverage, right? Some people, like some traders, we leverage through individual equities that are like high beta, right? So that's leveraging in volatility, right? And going in, but it's not quote unquote leverage, right? Because we're not borrowing money to make more money. We're just leveraging the risk, right? And then I always, early in my life, I had someone that's in my family had said, "Hey, are you scared of leverage?" And I go, "Well, yeah. I mean, that's super scary, right? I mean, that's and then he goes, "Well, are you ever gonna buy a house?" And I go, "Well, yeah, one day, right? And this is when I was a lot younger, and he goes, "Well, that's probably the most leverage you'll ever see in your life, because at the time it was like 5x leverage, right? You put 20% down or so, and uh, and nowadays it's like 90% leverage, 99% leverage, right?
Oh, the VA loan, I had infinite leverage. I didn't have to put anything down.
See, there you go. I mean, that's a ton of leverage, right?
Yep.
So it's like, well, I mean, technically speaking, a lot of things in life are leveraged already, right? So a little bit of leverage and things like that, and even the sleep well portfolio. And I mean, of course, this is my perspective, but 3x leverage or so on like the heaviest one, not so bad. Anyone that does an options trade is already doing like 100x leverage, right? Um, at the same time, it's position sized, right? I know as an options trader, we're kind of like, well, yeah, but I wouldn't put my whole entire account in it. Well, of course not. I mean, we just position size things. So yeah. Anyways, long rant around the ring, same thing. It's Sleepwell's been doing strong. We've had a really good strong week this week due to position sizing and how the portfolio manages risk, and cranking into new highs into a new year, which is fantastic. And we've gained a lot of people that are enjoying the service, and it continues to grow, and it provides a big value to people. That is a really laissez-faire approach that's been really well in people's accounts that they don't necessarily want to continuously manage. And then Tom, you can even talk to about um, the managed version of it too, right?
Oh yeah, we're pretty close to finalizing an agreement with an RIA with LEF Capital to have the sleep well traded professionally. So again, it's kind of like the auto trading at Striker for Night Owl. This is with an RIA. It's a registered investment advisor. Do managed accounts. Probably at some point when they get enough assets under management, they'll transition to a fund. But for now, it's just individual accounts. And Leslie will take care of that for you. But we can't say too much about it because we're not professional investment advisors. So that's his area of expertise. But bottom line is, even if you like trading it, maybe you have friends, family, neighbors, coworkers, whatever that could benefit from it. They can get the same benefits, just have it done for them.
Yeah, that's been a key thing, because people that reach out and they ask about the service, a lot of us, we're already trading, maybe 1, 2, 3 strategies. I mean, if you're really cranking away, maybe you're doing 5 or 6, right? This is, full time, doing multiple strategies, and it's like, well, I don't want to do another one, right? So it's like, well, don't, but have someone do something else that's at least diversified, right? Even if
Right.
they charge a fee, or even if they charge something like that, it's something reasonable, obviously. But I mean, it's still growth in an uncorrelated way, and that's how we grow wealth, right?
Right. Absolutely.
Were there any
And
specific questions or anything like that, or?
let me see if I can find the chat. Let's see. I'm on Gabby's laptop.
Oh, nice.
Well, it's actually my old one, but I got a new one last year. So now we brought 2 laptops with us to Europe. So I'm running my ExperSignal live trading thing on my laptop, but I can't have 2 Zoom meetings open at the same time. So I have to use hers for this
Mm,
one.
yeah, makes sense. My wife always gets my old laptops as well. It's kind of funny.
Okay, so Mark Ansel says Wayne's point about position size planning is crucial. In designing Night Owl, he deliberately designed in its positions to risk no more than about half the daily loss limit at Top Step. Top Step's daily loss limit is extremely tight at 2% per day. A typical Night Owl trade risks about 1,000 to 1,500 on its market if touched entries, and that's probably on a $150,000 account.
Yeah,
So
there you
yeah,
go.
so that's risking about 1%. Most directional traders that I know will risk 3 to 5% of their whole account on any one trade.
Yeah.
Option
And I just,
traders, and I've noticed, don't really follow that guideline. They, they'll take an account and put it all in a broken wing butterfly that's
ooh,
got huge amounts of tail risk, and not think about it until
ugh,
the market sells off too much.
yeah, no way. I mean, so that's an old adage, right? The whole income trading. That was something that,
I think Dan Sheridan came up with that term.
man, I mean, what a brilliant, like, marketing style or whatever. I mean, the whole income idea, right? What is that? Well, it's consistent
An
returns.
annuity, yeah.
Right. It's just, I mean, well, it's all, yeah, it's all consistent returns. It's just growth, right? Consistent returns, whether it's through quote unquote theta, which is, time. So you're getting paid by time. Well, it makes sense if you're working off the old model that time is money type of thing. And if, I mean, but if we turn around and we think about, okay, well, assets make money. Well, as long as we can just have different assets all making money all at the same time, and they're all playing off of each other, then we can make income through just growth and through asset holdings. I mean, it doesn't necessarily have to be through time. And so it's all really talking about the same thing. It's just growth, right? So growing an account is growing an account, and as long as it's done in a consistent way, then hey, we're income traders in that way as well, right?
Right, and there's nothing wrong with having, say, multiple trade alert services here, and say as an example, you would put a good chunk of your portfolio in the sleep well, another piece of the pie in something like um, oh, I don't know, the Dreamlifter or boxcar trades or something, but you're diversified. You're still trying to get a little spec income returns with the more active trading styles, but the sleep wells there are giving you consistent growth without having to worry about that part of the portfolio too much.
Oh yeah, I mean, there's a few subscribers that, I mean, they're doing completely different things, swing trading, individual trading. I mean, they've got, strategies that they've been running for, 20 or 30 years, and that's what they're doing. And so, it's all playing off with just different things. They just, I mean, some of them have been doing it for a really long time, so they kind of know the value in having a base portfolio that kind of reacts differently. And especially like you were talking about, most position sizes for like individual stock trades are, no more than 3% or something like that. The catch with that is that if if we get a bunch of positions on at 3% and say we're holding 50% of our account in these small 3% positions, we're uncorrelated in a maybe a daily move or a small move just due to kind of how that is. But we do have to actually start taking into account asset correlation at that point, right? Because if it's all in individual equities, right, how will all those individual equities happen when the entire boat drops, right?
And
Are
most of
they
this is
all
most of that
good?
would be for like directional guys, say day trading or swing trading, where they're doing like one trade and the most they'll lose in that trade is X, and then that trade's done, then they move on to the next one.
Oh, for sure, for sure. And then yeah, you build a position or something like that. And day traders, they're a totally different animal.
For
Of
sure.
course, some of them day trade and then they just have cash overnight, and some of them day trade and then they have a regular portfolio that they just kind of throw all their new winnings in. So, but yeah, I mean, holding cash at all sometimes is a negative thing, as we've seen all year long. Cash has been decimated all year. So.
I don't know exactly when the RAA is going to be ready for clients. I think it's pretty soon. Leslie, I think, has a disclosure document ready to send people. I think he's talked to a few people, but it sounds
It's
like he's basically ready to flip the switch and go.
Yeah, I'm pretty much sure in the amount of time that it would take to get the documents, so probably about a week, everything will be completely up and running. We've got the system up and running to where um, processes and procedures and backups and everything like that will all take care, so that way everything is taken care of on a process-oriented basis. So that way it's all constructed properly, and there you go. So it's just pretty much at this point getting through documents with onboarding, and then people just sitting back and relaxing and letting things work their magic over time.
Right. So have you talked to Tim at all lately? Tim Pierson?
Yeah, we have. We've gone through quite a bit of things. I guess you're probably alluding to the options version of the Sleepwell.
Yeah, I mean, Tim's missed the last couple of meetings, so I hope he's okay, but
Yeah, he's doing good. He's doing good. He's a busy guy. You know, uh, he makes himself busy doing things that he enjoys in life, and you know what? That's
like flying, I know.
yeah, that is the whole goal. If if we hate trading, then don't trade all day. Which he doesn't hate trading; he loves trading, but he just finds a balance, right?
Right.
Um. Anyways, yeah, the options version of Sleepwell, we've been working back and forth on some things, and we're getting closer to answers to where we can start collecting some mass data. And it's still quite a bit of work in the future. There's a simple version to use options on the Sleepwell, which actually there's a few subscribers that already do, which is they just convert it into either an ITM call, or they do a covered call on something or something, and they just kind of leave the delta exposure for a certain amount of capital that they're wanting to expose, right? And those are like somewhat more advanced options traders. What Tim and I are working on is taking the positions and um, actually constructing an entirely new type of trading on like the SPX, where there's just high volume, no one's got to worry about anything, and beta weighting it in a way that it kind of morphs on its own, and kind of using the sleep well as its own like maybe delta parameter, right?
Right.
And then um, and then from there also using things that we talked about, which is where like skew and volatility and other edges and options are starting to become a little bit more challenging, or maybe they're more beneficial. And so getting structures on that can take advantage of that. And that's what we've been working on, is testing structures and making sure that what we're attempting to get is what we're wanting to. Just because like as of late, there's been times in the market, especially even last year, that being a quote unquote, theta trader was not actually paying theta, right? Sometimes selling theta is actually the better play to make consistent profits, even though it's against quote unquote time. So, just because the volatility and the spread relationship was so degraded.
Yep.
So, yeah, so that's what we're kind of working on, is making sure that we're getting the right exposure and it's something consistent and something that's has been vetted as long, or has been vetted as much or similar to like kind of the original Sleepwell. So everyone just kind of be patient with us, and we're going to work through it. And I know there's been a lot of requests for an options version. We're making sure that we're not just putting something out it looks good, but actually will perform very, very robust to how it is synthesized. Because at this point, we wouldn't have much live trading.
Right. And I was even thinking with the Sleepwell, after Daniel finishes his signal generator, see if he's interested in maybe helping tweak some of the algos. Because he's pretty good with math. He's a math professor.
Yeah, that's a whole nother world, because if we were to, yeah, I would be really excited to see that and kind of go with that. I'd love to work with them too, because of course, I have worked with a few machine learning and AI programmers, and even just algorithmic programmers, and there is a propensity to curve fit, to overfit, to do a bunch of different things. And so, and it seems like he's got a really good handle on not pushing that boundary a little bit too far, but keeping it almost constantly in the gray area of where, hey, it's we're using so much like rough estimates that we're not so exact that there's some robustness to it. It's very interesting. A lot of engineering minds. I've worked with a few engineers with trades and mentored a few, and it sometimes gets a little bit hard because when we're so precise, that's actually can get us into trouble in the markets.
Right.
Right?
Well, I want to wait for him to finish what he's doing before I even ask him, but we'll see what he says.
I'd love to. I mean, it would be such a great marriage with that. So yeah, I'd look forward to that if you'd be willing to.
All right, cool. All right, and I see Tim Broff said he has something he'd like to show the group. So Tim, if you're still here, are you able to talk?
Oh, I should be.
Oh, hey Tim, morning.
Morning. How you all doing?
Good. Well, actually, it's dark here in Belgium, but
Oh,
it's
really?
well, it's I guess 5:30 in the evening.
Oh, okay. Yeah, that makes sense. Yeah, I'm put a little spreadsheet together. I've been curious about how much the price of an option moves based on VIX and the IV,
Mm-hmm.
and I'd like to put that up if I can, just to get some input from the rest of you.
Yeah, you should be able to share your screen. Yeah, it should be ready to go.
Are you seeing the spreadsheet?
I do.
Okay, good. I have two monitors. I wasn't sure which one you're seeing.
Yeah, you got the right one.
Okay. This is just a spreadsheet I put together. I wanted to track how much price of an option really moves related to the VIX and the Vega. And you can see here what I've done. These are the strike prices, obviously. This would be January 22 expiration, January 19th. But if you look over here, these are dynamic, so they're going to move with the market. But then I copied and pasted over here to make them static. Maybe I said that backwards. Anyway, these are a point in time right here.
Okay.
And you notice here we had on January 4th at 3:30, had the SPX at 36.95, the VIX was 26.75, the mark was 89.80. Here we go up 2 days. The market's up a little, not a lot. The VIX went from 26 to 24, But look at the difference in the mark from 89.80 to 64.20. How much that's moved.
See, let's strike, that was a 37.55.
This is 37.55, right?
Well, so it was in the money. It was in
This
the
was
money
this-
about 60 points, and then it was only in the money about 20 points. So I think a lot of that is just the in the moneyness.
Come down here, we're a little closer to the market. So here, and this is also a January 19 expiration.
Right. It looks right.
That one hasn't moved quite as much.
And it's
Quite
it
as
was
much.
farther out of the money, but it's still out of the money even after the market went higher.
Okay, and then here's one of 38.24, and this mark was $21. This was on Friday at close. And this is this morning at January 10th at 10:16. And look at the big jump in the price. We are only $3.
It's like volatility went up 2 points though.
Yes. Yes. I guess what it's, as I'm interpreting it, just a little bit of a move in or out of the money, a little bit of a move in the VIX can really shoot the prices up and down.
And Serge is asking the markets from what symbol? I'm assuming SPX.
This is SPX, yeah, if you look at the, over here.
Oh yeah, there we go. The option symbol.
I thought I changed that to a different strike. This out to February 21. Change this to February 21 strike.
I think, did you have an extra digit after the 21?
Did I? Oh, yes, I do. There we go. This is not really all that responsive in Excel. Let me close it down, start it back up, and it should give it to us again.
Is that getting data from TOS?
This is data from TOS, right? Still moving.
Still got the 19th of January, and it looks like.
What's that?
Oh, did you want to put in that February expiration?
I did. I thought I. 221. Oh, I didn't save the sheet. That's what happened. Yeah, this is why I don't use that RTD function a lot,
Oh yeah.
because it's just,
Well, February 21st is a Sunday. Sure that's the right date?
12, I'm looking at, yeah, 12/21 expiration in TOS here.
12/21 or
Sorry,
2/21?
February 21,
It's a Sunday.
February. Huh. 12. Okay, got the year mixed up with the day. It's supposed to be February 12th. We'll get this right eventually.
You got the 1 and the 2 right, just the wrong order, right?
2, 12. That should be right.
It's my son's birthday. Yep.
Okay. Finally.
There we go.
I guess the main thing that surprised me is how quick they can move. Like from January from 10:30, this is close to open to close. That mark, moved $15.
And then up $16. Yeah.
And back up $16. Yeah.
It's like Rich Lizakowski said, the price of single options on large indices can move a lot. That's why we spread them.
So I guess that makes me think that instead of putting trades on right away, we should put them on and wait a little bit and see what the price does.
Well, it's certainly one way of,
Of course, it can always go against you too, so that maybe that's not the best idea either.
yeah, I've usually found when you do that, it kind of averages out. Sometimes you get better entries, sometimes you get worse. But it's usually fairly close to what the average would have been if you just put it all on at the same time.
Yeah, I've never.
It makes it more complicated too. Then you got to remember to keep putting more trades on to get your bucket filled up.
Yeah, that's for sure. Well, I just wanted to throw it up for ideas. That's all I really wanted.
Okay. How are your trades going?
Well, they're doing pretty good, except this morning I hit pretty bad on one. So
What kind of stuff are you doing?
I do a variety. Credit spreads, debit spreads, calendars, diagonals. Mostly
No one favorite that you focus on the most?
No, mostly it depends on my direction of the stock or the option.
Gotcha.
Mostly based on technicals.
Right.
Try to pick up on the trends.
Well, it looks like a nice sheet to kind of see how things are working. So thanks for sharing, Tim.
You're welcome. Okay.
All right, and I guess let's see. Rich said try charting individual options on toss. You can also subtract and add symbols to chart spreads. So that's another way to kind of see how the prices are moving of those individual
Okay.
options.
Stop the share here.
Okay, and Dave Thomas, you're up.
Hey Tom, how you doing?
Oh,
Happy New Year.
good.
Happy
Yeah,
New Year.
Happy New Year to you.
How's you're over still in Belgium?
Yeah, we just changed our plane tickets. We're not coming back until the 18th of February now, so we'll be here another month. There's still a lot to do. We did find a buyer for the house for Gabby's mom, and fortunately, they're just going to take it as is, so we don't have to clean it out. So that's one headache we don't have to do. But still a lot of stuff to do before we head home.
Okay. Well, that's that's why it's good to have flexible plans, all right?
Yeah, and be able to work from anywhere.
Exactly. So yeah, so I'm glad to join in. I haven't been on in a few weeks, and we've been pretty busy with some changes going on within the Dreamlifter Flex trade kind of service, and so thought it'd probably be a good time to come on to at least have a brief chat about that.
Yeah, you can give us an overview of what's going on.
Yeah, I had kind of looked back at the what had been going on so far since we started basically the 1st of July, and based upon what I saw going on with the market and what I had found, and this was literally by being in a trade, one of my not alert service trades, but just one of my other trades, and I was going along, and it was getting towards the end of the trade, and I was trying to make some assessment of how to try to do better with it, and come to find out, it was like, okay, well, there's it led me off in a direction where it was like saying, there's being the flex trade being one where it's it's always trying to be flexible with the environment with whatever we're trading in. I had gone through and did some analysis and did some work, and actually ended up talking with the group, and we ended up the first flex trade that we were in for 76 days. And from about September 15th to about the end of November. Well, since then, we've put on 6 trades since November 30th, and net we're up about 8.5%. And so we've completely changed the whole perspective. Flex trade was meant to be flexible with the environment and with the market and what I was seeing. And I basically, my son and I have actually gone through and done quite a bit of back testing through the last year of when the market has been significantly changed since basically end of February, mid-March, ever since COVID came about, or when the volatilities went super high. And so we've changed things around and tried to be much more in sync with what the market is doing, and most important, I think, where the opportunities lie. So I had done that through the month of November privately, and then I was convinced that things were going well, and that I ended up switching then the trade alert service over with the flex trade over to something that was slightly different. So we're doing things much more. It's quite a bit more active, and actually temporarily not doing any Dreamlifter right now, just because with the market the way it's going and being in the market with the swings that's going on, the returns were just not as good as I could see that I could get with a flex trade. So with the
Good thing you have both then.
What's that?
It's a good thing you have both. The Flex
Well,
and
yeah.
Dreamlifter. Yeah.
Exactly. And what I'd found with the Dreamlifter is that it's still, I think, a very, very good trade. But right now, the whole key thing, and we always talk about this, is about being, even Wayne talking earlier, is that we have to be adaptable to whatever the market is doing. We need to be willing to change as the market is changing. So I had actually gone through and except for, I would say, this past week, I actually had completely modified the Dreamlifter to instead of being like about an 80-day trade, basically starting it in about half the time. So maybe like about 39, 40 days. And I was able to kind of, at least through back testing, get back to where I thought we would be. But you take a week like last week, with the advances in the rut, every day, even that trade, the problem is that you would have got so far up into the upper part of the butterfly so quickly. It basically, if you were still trying to keep the risk intact, it would be difficult to make a lot of money. You probably would have just been treading water a bit, given the market of what it did last week when the rut was up, over 200 points or more.
Mm-hmm.
So what I had found with the flex trade now is, like I said, we've done about 6 trades so far. 5 out of 6, these are live trades. 5 out of the 6 trades have been winners. We've had 1 loss, and we're trying to limit the loss of any one particular trade to the amount of money that we would profit in one trade. So basically a 1-to-1 type of an arrangement, but we are doing them weekly. The maximum amount of the time in the trade so far has only been 3 or 4 days.
Isn't that kind of the risk management you guys used in the parking trade? You'd take about a loss about equal to what your gain would be.
I'd have to go back and look at that, but I think so, Tom.
It sounds familiar.
The major difference is that, that was over probably a 2-month time period.
Yeah, that was a much longer trade.
Here we're talking 3 or 4 days.
Right.
So
in and out. Yeah.
In and out. Yeah. And so the nice thing is that, even like last weekend, the trade, and as a matter of fact, I believe, I might be wrong on this, but I believe every single trade now we have just let expire. So
can you show us a sample flex trade?
I don't have any on right now, Tom. I'll be putting one on later in the day. Literally we're out until later on today. but it's the interesting part of it is that it's a similar broken wing butterfly. Okay, but I've just come up with a rule set that has been fairly complex. I'll admit, but we're doing trading every day, but it's only for a couple days of the week, and usually just one trade a day. But it is usually we definitely do a trade once a day. So usually we're getting in on a Monday, and then we've got to trade, Tuesday, Wednesday, and then sometimes on Thursday, or possibly taking it off, and then that's it. So it's very quick. And so it's
So you're putting on multiple trades at once, or?
No, just one. Just one.
Just one. Okay.
Just one, and it's about a $30,000 trade, trying to make approximately, well, so far, like I said, we're doing about 8.5% for the first 6 trades, but there was 5 weeks in December, so that's basically the month of December plus 1 week in January. So
if we call it 6 weeks, that's like 1.5% a week, something like that.
It's actually, if you take a look at the returns, they're like 3.5%, 3%, 2%. 1 week was like about a little less than 0.5%, and then about 4.5%.
Okay.
The week that we lost a trade, it was like about 4%. So similar to the other ones, we lost a little bit more than instead of usually trying to make about $1,000. And but each week that we've gone into this, it's been fascinating because people have been sending me emails and such within the group that they're very, very excited about it. And it's something where I know I'm trading it now, my son's trading it, my daughter's trading it, and my older brother's trading it. Everybody in the group is trading it. And so it's been a complete switch around, because remember the days with our buddy Dan Sheridan. It was like, the
How
last
can I
week,
forget?
the last week of expiration was basically, the zone that you absolutely stay away from, pretty much
Gamma
all.
week.
Yeah, basically. And what we're doing here is that I've set up a system where the risk is very, very tightly controlled, and it just is each day it really depends upon specific adjustments that I make, and it's completely based upon. It's almost like there's a different rule book, Tom, every day, and it's dependent upon what the market is doing and what our past trade was.
Right.
So it's everybody, as a matter of fact, people are sending me emails over the weekend trying to figure out, like, saying, hey, can we increase our capital with this? And so there's definitely some excitement within the group, which is really great to see. So I can come on later and show you, but I'm telling you, it's a standard broken wing butterfly, just like what we had with kind of like the Dreamlifter or with the Flex trade, but the specific rule set that I'm employing now, and because of the time frame, it's completely changed everything. So
yeah, maybe we can either have you on more in-depth, like next week on Trading Group 1, or do a whole roundtable. It's up to you.
Yeah, it's like I said, it's been pretty fantastic so far. It's we're trying to. My main issue with this is that this is not something where you can go back over the last 10 years and back test it, because we've got but we did do it over the last 9-10 months. We back tested during that time frame, and we're even now looking at. My son and I are now looking at what happens next. In other words, okay, we've got the volatilities within the market, and we all understand why that's happening, because for a multitude of reasons. But eventually, the market's going to calm down.
Right.
And
it will.
so the thing is that, okay, how does this work with a much lower volatility? And I'm now starting to work on that, basically the next phase of it already. So it's and so far I'm looking at it and are able to. I think the basic concept and the structure of the trade is such where I think it would be very doable even with a lower volatility environment. And so anyway, it's just kind of exciting right now. We've been busy. That's why I haven't been on so much, because we've been really busy just kind of putting our heads to the grindstone here, just trying to really work at this very, very positively for the group that's in the trade alert service right now, and really trying to get something that would be good for the environment that we're in right now and for the future. But I think that being in something that is, some people might look at it and say, well, gee, is this like super aggressive? Is it super risky and whatever? And it's not, okay? It's we're trying to, even with the market variations, because we're only in it such a short period of time, and our adjustment criteria is quite rigid in the sense where you're really looking at day to day what's happening and taking into account pricing of the market that's happening each day and how it's changing, and that can directly affect the structure of the trade and what the adjustments are and how we go forward. So it's so anyway, so it's kind of neat so far. I just thought I'd at least share the results of what's been happening so far over the past 6 trades, and we'll be putting on. I think we just had another gentleman out in Asia join up last night, and so he's looking to want to be able to put a trade on today. So we're
From
happy
Singapore,
about,
I think, if I remember
yeah,
correctly.
yeah. And
Yeah.
so even with the time zone difference, it's still workable. Not as good as here, but or as Europe, but a little bit more challenging out in the Far East.
So how much screen time do people have to have as far as being in front of their computer to do these flex trades?
That's the beauty of it, Tom, is that it's basically still 1 trade a day. And
Okay.
so
At the same time, or?
we're usually putting the trades on right towards the within the last hour of the day.
Okay.
And so there have been times where, again, depending upon what the market does the following day, I've had at least 2 out of the 6 trades so far. I think on a Tuesday, we made some changes based upon kind of a technical call that I had, where that day was a big market move up, and we went past some fairly recognizable patterns fairly early on during the day. As a matter of fact, I was in my webinar, the Zoom meeting with the group on Tuesday last week, and I actually cut the meeting short because I said, hey guys,
Gotta go.
gotta go. It's time to do something here. And then, within minutes, everybody had had their adjustment on, and then that was it for the rest of the day. It was just there was a significant enough market move, and that happened one other week too. But the interesting thing, Tom, is that if that might happen on a Tuesday, but if the same thing happened on a Wednesday, because things change so quickly, as you know, gamma is high, theta is high, and all these things, every day that can change. And so you could literally write a playbook, kind of thinking like a football analogy, your playbook with your set of plays, it changes so much that, it's, but people that have been in it have been really excited about our Tuesday sessions. They've been really learning a lot. And so, anyway, so it's something that we're just trying to take advantage of while we have this opening of this higher volatility. And, like I said, some of the trades we've seen, significant, returns, compared to, other trades during the same time frame. So,
Right. And if people are curious about it, they still get 50% off the first month, right?
that is correct. Yeah, new people, sure.
Okay.
Yeah, so if anybody wants to join on, it's still the same rate, and would love to have you. And like I said, some people that I've talked to personally, we're very excited about some of the trades were going on, especially the first trade that we had that lasted so long. And I said, this just doesn't feel right. And so the good thing is that, because we're not totally within just a set of rules that we have to keep forever and ever and ever, hence the name being flexible. You know, nice that we're able to go through, and like I used the month of November to do some live trades myself privately while doing back testing, and then was able to roll it out to the group after doing it a month on my own, and also doing about 10 months worth of back testing, like I said, to be able to do that. So,
Great.
oh, sorry.
No problem.
Sorry,
All right.
my grandson has just entered.
Well, it's time to wrap up the meeting anyway, so he had good timing.
He's being who is this? The Woody from Toy Story was just coming into my office.
Oh, gotcha. All right, Dave. Well, pretty exciting update, and we look forward to maybe doing a roundtable or an expanded presentation maybe next trading group meeting.
Yeah, we'll see how things go. And like I said, we've been keeping busy here. As you can tell, my grandson is still here. He's here every day doing, we got daycare going on in the house every day. So that keeps other members of the house really busy.
Of course.
But as you can see, I did forget to lock my door. So he was running into the room because he just arrived.
High energy. All right, you take care, Dave. Thanks again for the update.
All right, thanks, Tom.
All right, thanks everyone, and we will see you next time. There's no roundtable this week. Next week, I actually have a CML Viz Trade Machine Pro presentation on the calendar. I'm not giving that. That's Ophir from who actually created the service, but they've got a big update, so I put it on the schedule if you guys want to check it out. But no roundtables this week. We'll get Mark and probably Dave on for more expanded stuff on soon. And Mark, I'll get in touch with you. I've got another meeting in about 20 minutes, so after that one, maybe I'll give you a call. But thanks again, everyone, for coming, and we will see you all next time. Thanks a lot.
Bye.
Bye.